are and record, and we are away. So good morning, everyone. Officially welcome once again to our weekly webinar. 30 minutes of just quick, brief updates, focusing on one key topic normally for 15 or 20 minutes. And yeah, we're continuing to do these. A lot of people are commenting on the value that they're getting just by tuning in and keeping updated, not just with our company in terms of Leo crowdfunding, but also with the updates from John and part of Property Fortress and his take on the market and his observations on with the different guests that we have. So let's get straight into today, because a lot to get through as normal. For any new people who happen to be on the webinar this morning, my name is David Johnson. I'm the CEO of Leo Crowdfunding. We're an equity property crowdfunding business. And my weekly co-host is Mr. John Corey. I'll let him introduce himself briefly.
Morning, folks. Just catching up on some market news. It's interesting how you see lots of things as you get older, you know, perspective of the market, and some things never change.
Indeed, indeed. And also joined today by quite a regular contributor, Mr. Tony Alner, who is the Chief Operating Officer of Leo Crowdfunding. So good morning, Tony.
Morning, David. How are you?
Yeah, very well indeed. Thank you for joining today. And obviously, we're getting stuck into some quite exciting news for Leo Crowdfunding and our fundraisers and investors. So by way of market update first, the one selected for us this week to talk about, surprise, surprise, we're still talking about the market rising, the buoyancy. But I think it's fair to say there's more and more articles appearing and blogs being written and columns being written about the fact that at some point this has to come to an end. It can't just keep on this upward trajectory. So happy to hear thoughts from John and Tony on that. And then the other one is that about the property hotspots in the UK. So maybe Tony will start with that one first. Actually, in terms of the property hotspots, there's been a lot of focus on those areas. Which are the areas that are most seeing the growth?
Well, it's like it says in the banner there, that the majority of them are in London. I think 9 out of 10. And primarily that's, of course, because of the transport links, Crossrail and the Eastern Line. So the areas in question are Greenwich and Hackney, places like that. So it's all to do with the connections from London across London to the outside of London. Is inevitably a bigger demand for housing. Yeah.
Okay. And John, in terms of this, I suppose, almost daily discussion about when does this boom end and how big will the crash be or the correction be, depending on what your view is on things?
Yeah, this is sort of interesting because a couple of things. Who are these buyers? Are they cash buyers? Are they trying to get a loan? You know, that probably affects the longevity of this. Second is, I saw something said yesterday that in the US marketplace, 149 of the highest price communities are the ones that are not seeing much or any appreciation. It tends to be in a different range. So I don't know what to make of that. That doesn't quite compute, but the idea being that it's possibly people who are buying that have jobs rather than people who are just wealthy and buying the very top end. And what I thought was the most interesting is how someone wrote in the Times, it was an opinion piece, that we think it's related to stamp duty. And they said, well, then why are there 30 something other countries around the world seeing massive house price appreciation right now? Out of all these other countries, very few have stamp duty. So the US pretty much does not have stamp duty other than the state of Pennsylvania, really. And it begs the question, is June going to be an issue for the UK because of the end of stamp duty? Or is it just people have a lot of savings and they're willing to put it into housing now?
Mm-hmm. Yeah, that's certainly what the article refers to, that you know, the savings were there, and therefore people were taking advantage of what they were seeing as a buyer's market, so they were getting in, which was Yeah, and you mentioned the US actually, John. The next slide, which is an interesting one, poses a very interesting question. What can we learn from the quote unquote crazy American market? So it wasn't me said the American market was crazy.
Yeah.
But,
well, is it
what's your
American? Thoughts? Is it American? Is it housing markets in general? There's a lot of differences in the market. First of all, people should pay attention to that. The way that buying and selling happens, the way that loans are arranged, whether it's long-term fixed. What the US market is seeing is very, very low, extremely low interest rates on long-term products. You might be a buyer in the US looking at a 30-year fixed rate. That means it'll never go up. It'll always be the same. It'll be paid off after 30 years, and there's almost no redemption penalty if you pay it off early. So locking in a low rate is sort of an obvious choice, because you don't have to worry about if you exit after 5 or 10 years and paying a premium. There's no premium to pay.
Mm-hmm. And in terms of what's happening there, currently, obviously America's experiencing something similar to the other countries you mentioned, that there's this sort of growth that seemingly defies logic, and that most people were saying, oh, post-COVID is going to be this huge crash all around the world. I mean, is it pretty much the same in the US as it is in these other markets, developed markets, that it's just strange growth, strange buoyancy?
Yes, I'm not sure that anyone can exactly interpret this at this point. Big difference here, we don't have furloughs the way you have them in the UK, and yet a lot of people are back to work. And there's also firms struggling to get employees, as you see in the UK, you see in the US. People have chosen to switch careers or switch locations, work from home. And if your firm says you have to come back to the office, say, great, I'm out of here. There's all these other jobs waiting somewhere else, and they don't want me to be in the office, so sayonara. So I think a lot of this is people thinking about lifestyle, thinking about other things. I don't understand, though, where they're getting the money to pay these inflated prices. From what it seems to be is there's just enough people with cash. And why they have cash, they couldn't have saved that much in the COVID period. So what are they doing?
An interesting question, and we'll see how that plays out. I suppose the next couple of months will be certainly significant in the UK market after the stamp duty. But certainly, as we all know, property goes in cycles. You got up cycles, down cycles. Some bigger spikes, some lower dips. But thankfully, the industry has an upward trajectory on average over time, which is why I guess we all enjoy and like the world of property and property investment. So thanks for that, guys, in terms of the market update. So a couple of very brief updates regarding projects before we get into our topic of today, which is around introducers. So the first announcement is that we have a new project that is being prepared for the platform. This is Hightown Leys in Banbury. This is a single dwelling construction. It's a bit of land in between two existing houses, and they're going to build a single dwelling. So obviously this is coming soon. Information is very limited at the minute. So when it goes view deal and when it's fully approved, you'll be able to look at all the information in due course. I can indicate this is a JV partnership project from Hitesh, who's known to us as part of the Creation Tech 99 capital team, and he's partnered with Michelle Van Ruyen, who has got some really good experience in interior design and property. So they've come together to do this deal, but they all will be revealed when we go view deal, and you'll be able to assess this one. And of course, Citygate is there to be viewed by anyone interested in investing in the Citygate project. You can go onto the platform. If you click on the closed grey box, you'll be able to download the equity offer document. And this is the commercial to resi project in Leicester. So that's a project people can go on now and obviously have a look at that if they want to invest.
Question?
Yes, John, of course.
For coming soon, is there any way for someone to register their interest that when it's ready to view deal, they'll get notified?
Not currently in terms of functionality. That's maybe
Okay.
one Tony to jot down and see can we somehow add that in on that phase. I suppose they could just email support@leocrowdfunding.com. If you email support@leocrowdfunding.com and indicate that you wish to receive an email or notification when it goes out. Obviously, when it does go view deal, there'll be an email go out to all registered investors from the platform. So that will obviously be a trigger. But if someone's on the webinar who's not registered yet, but you're interested in that, then support@leocrowdfunding.com, and we'll certainly keep you informed when that one goes view deal.
One extra comment on that, just for everybody in the audience. I would strongly suggest you do not check, don't send me marketing information, because technically, if you're interested in when a deal goes live, if you've checked that box, then the platform technically can't even tell you that it went live. I've had a couple of friends say, how come I didn't hear about this? It's like, well, you check the box, it says you didn't want to know stuff. So be quite sensitive when people register on the site, not to tick the box, or do what you need to so you can receive promotional information, because that includes being notified when a deal goes live. And that's sort of the intention when you register for a deal.
Yep, that's a really good point, John. Thank you for that. Okay, so our main topic today is around introducers. So we have been working on this for a number of months. This has been Tony's main project, certainly for a number of weeks, for many hours a day. Tony, it's probably fair to say, because there's been so much has to go in legally and from a compliance point of view before you can launch something like this in this market. We're obviously dealing with investments. We all know the sandbox of FCA regulation and compliance and financial promotions that has to be adhered to. And then when you introduce introducers into that, who are, if you like, promoting the platform to people they know, then there's a whole area of compliance that has to be checked out. So delighted that we are now able to sort of fully launch introducers and what we call refer a friend. These are two different promotions. So just to have that really clear in your mind over the next couple of slides, these are different promotions. And I'm going to let Tony run through refer a friend initially. Tony, so you can explain the concept behind this and how it's going to work.
Yes, so actually the introducer promotion isn't really a promotion of sorts. It's more a program, and the refer a friend is very much a promotion, subject to changes further down the line. But the basic premise of it is anyone who's invested on the platform, a minimum of £100, can refer a friend or family member or someone close to them via the link that's on their account, on their profile, and presuming that their referral has followed that link, they sign up. Once they've invested into a project and the project is successful, success fee has been taken, £50 is credited to the e-wallet. The difference between refer a friend and introducer is fairly obvious, in that it's a one-off payment of £50. So you only get that payment once the person, the referral is invested.
Yeah, so if someone has a friend or family member, effectively every time they bring someone to the platform and that person invests in a project, obviously minimum £100 or whatever they invest, when that is a successful investment, the project is drawn down, the funds have gone to the fundraiser, then the person who did the referring receives £50, Tony, to their e-wallet, that they then can invest in another project if they so wish. I believe there is the function, if they really want to obviously draw it out of their e-wallet, because the money's now in their e-wallet and it's just an ordinary bank account. But obviously the idea primarily is that they invest in projects on the platform. Is that fair to say?
Yes, of course, yeah. And obviously, if they then want to invest in a project on the platform, the minimum's £100. So they can't do it with the £50 anyway. They'd have to make up whatever else they have in their e-wallet or as part way for their investment.
Okay.
So just David, technically split hairs, as I have been known to do, it is not a bank account. It is a trusted FCA regulated place that their money is held, but it's not a bank account.
Okay, e-wallet then, e-wallet.
Has no banking protections, it has nothing.
Yeah, well, it's an e-wallet linked to a bank account.
Well, you can transfer in and out, but it's not a bank account. It's just, it's a segregated account. That's their money. That's fine.
Yeah. Okay.
A client money
that's
account.
A very, very thin hair. That's a hair, but it's a thin hair.
Yeah. I have hair.
Funny.
It's a client money account is probably a better term for it.
Yeah. That's your banking expertise, Tony, coming to the fore, which is great. So this refer a friend is a really good opportunity for people to recommend the platform. I know a number of people have done this anyway. I know people have been saying to their friends, saying to the family, oh, you should have a look at this platform. So it's not that they're giving any financial advice, telling their friends that they should invest in a certain deal. They're simply point them to the platform. People then kind of look at the deals themselves and decide if they find a deal that they particularly like. So this works out very well for people who maybe have podcasts, maybe have their own social media following, have a group of their own tribe, if you like. Then they can simply send this code to their tribe and earn some income from there. So how this actually works, if you now go to your account when you're registered on the platform, so when you go to your account, you'll now notice an additional tab that wasn't there before. And this tab is the Refer a Friend tab. So you then can select Refer a Friend. And on that next page, you will be given your own unique referral code. And that's the code that you then can send someone by WhatsApp, by email, however you want to do it. But when they then register on the platform, they insert your unique referral code. So that's the process that links your friend, your introduced person to you on the platform. And therefore it's done automated from this referral code. Now, from a compliance point of view, Tony, this has to be capped. And the advice we have been given legally is 20 referrals is about the right number with the compliance restrictions. So do you want to just explain sort of around that a bit?
Well, actually, the legal advice suggested 20 as a max. So he probably, if he was pushed, would have said a bit lower than that. But anything over that would probably be considered as a way of the referral earning money and could be taxable. So we have to limit how many they can refer. And 20 seems a good enough figure before we could start considering it as being a sizable income that they're earning from this. I should point out, actually, on the screenshot you've got there, it says to refer to the Refer a Friend terms and conditions. And I would recommend that everyone does, because they are bound by them. I was going to put a clause in that connected it to the investor terms and conditions, but just by virtue of using the Refer a Friend service, it is bound by those terms.
Yeah, that's a really good point. And actually, the Refer a Friend terms and conditions are important. People should definitely read them and ensure they understand the mechanics of this. So this is a Refer a Friend. I don't know, John, if you have any observations on this. Obviously, you've been around the industry a while. You've saw numerous sort of similar things out there. I mean, how, in your experience, how have these sort of played out as short-term promotions?
It depends on which side you're looking at. I think it can be quite beneficial to the platform. When it comes to the individuals, and frankly, in my case, if I went over 20 and had to pay tax, I would have assumed I had to pay tax in the first 50 anyways. So, if it's only the issue is paying your tax, pay your tax. That's how so keep the NHS open.
Yeah. I think that the point being that if someone wanted to really do this in a big way, then the Refer a Friend probably isn't the right thing. it's they should become an introducer. So I think what we're sort of saying is that that sort of 20 figure is like the trigger that if you start hitting that, you know, and you think you're going to smash that, and that frustrates you, not a problem. Then what you need to do is consider being an introducer, because that's a formal way of earning commission, if you want to call it that, and an income from actually referring introducers to our investors to the platform.
So how does introducers work?
Yes, so that's what we're going to now. Tony, I'll let you go first. Tony, you can sort of cover the main bullet points.
The primary difference between introducers and refer a friend is that introducers is more heavily regulated, and you're more bound by regulation than you are on refer a friend, which is just a simple straight referral. On introducers, you get your, once you've reached a cumulative balance of 10,000 investment referrals that you've sent forward, introductions, however you want to class it. Once that cumulative balance of 10,000 invested is reached, you then are paid a 1% introduction fee. So even if the existing investors that made up that balance continue to invest, every time they invest, you still get 1%. But this is only over a 12-month period. I should stress that. It's an agreement period of 12 months. We review it after 12 months, and then it can get extended for another 12 months. So it works very much on a 12-month period. And the remuneration is once a month to the introducer. And once you've reached the 10,000 cumulative balance, there will be a one-off payment, which we've yet to confirm. But it's it should be a sizable enough payment. And once you've reached, like I said, once you've reached that balance, anything after that is 1%.
Mm-hmm. Yeah. So just sort of picking out some of the main parts of that. So this is an opportunity to earn a minimum 1% on all the investments that your introduced investors make going forward. There's obviously an annual review, but introduce someone who invests over the next 2, 3, 4 years, there's a potential to have a 1% accrual just coming into your account every time that introduced person invests. So there is the opportunity to have a long-term residual income by introducing investors to the platform. Now, you alluded to, and rightly, the one-off payment. Obviously, 1% for some people, think, well, 1%, maybe not hugely exciting to get someone to invest 10 or 20 or 30K and only make 1%. For that first 10,000 cumulative, so once someone hits that first 10,000, there's actually going to be a one-off payment. Hasn't been absolutely finalized, but I suppose holding your mind something like £400, £500, £600 type payment. So a substantial payment paid at the point of reaching the 10,000 initially, and that will make it more interesting and attractive, if you like, to someone who goes out and wants to bring introducers. But it's not designed to be a short-term earn a fortune of money. That's not what it's about. It's about introducing people to the platform who over time will invest substantial amounts of money. And if you're the introducer, then you're going to receive a small payment every time those people invest in the platform. So it does create genuine long-term income. So yeah, we're very excited by these two, a program and a promotion. And we've had a lot of people ask us, if we bring someone, what do we get? Or if we get, how does it work incentive wise? So now we have tangible options for people. If they want to just be a refer a friend, absolutely great. If they want to be more formal introducers, absolutely great. You can reach out to us, and there's actually an email for the introducers, which is introducer@LEOcrowdfunding.com, and you'll be able to look at that. So, John, any observations on that before Tony just runs through the mechanics of how to register?
No, I'm listening to YouTube. So
okay, so Tony, why not just run through sort of bullet point the process, because people do understand that to become an introducer, there is a process that we have to follow because of compliance. So you want to just run through these quite quickly?
Okay, yeah. Refer a friend is obviously very easy. You just get your referral code and it's done. For introducers, we need a bit more involvement from a compliance perspective to ensure that you're not giving advice, not steering, and that everything is in accordance with the regulations and the investor terms and conditions, which will be on the website. And there is a set procedure as well, which will go out, which is a very long document, which explains exactly the protocols, what you can and can't say, what you can and can't do. So firstly, as you said, David, in the first instance, we need to be contacted on introducer@leocrowdfunding.com, and we will set up an introductory call where we go through a questionnaire for suitability purposes, and if we feel there is it's worthwhile for both of us to go through with the introducer arrangement, we'll ask for a one-page bio to be provided. We can have a template for that if you're struggling to complete a bio, but it should be relatively straightforward. And then it goes to committee for approval once a month at the moment, I think. And once we've approved it, we'll then go through the normal KYC process that you would go through, that you would have gone through as an investor, if you are an investor. ID checks, KYC checks, AML checks, general identity checks. Then we send out the introducer pack, which contains the terms and conditions, the investor and introduced investor declaration, which is basically our legal document for the investor to confirm to us and the introducer that they haven't been given advice, they haven't been steered, and that they are comfortable that we are remitting the introducer for every investment they make on the platform. And then they have to go through a training session with us, which explains the restrictions in place, financial promotions restrictions, GDPR. Obviously, everything has to remain compliant when transferring personal data. And after the training, like I said, remittance is paid is once a month. You'll get a remittance advice, which explains how much of your cumulative balance is left. When you've reached the cumulative balance, a breakdown of the clients, everything you need to know essentially. And then after that, we it's not on this diagram, but there is a monitoring period. We monitor once every quarter and an annual monitoring review as well at the end of the year for all introducers. But there's also an individual introducer monitoring program, which we'll do towards the end of the first 12-month period to see if we're going to renew the agreement or cancel the agreement or postpone the agreement, then not do it for a year, whatever. It's basically a review period at the end, and that's it.
Brilliant. Okay, so that lays out the step-by-step. People can do a quick screen grab, take a quick image on your phone if you want, but there is a formal step-by-step process. So we're certainly excited. We've taken a number of months, and some of you I know have been very, very patient, and we really appreciate that. But we had to get this right. I say there was obviously lawyers involved. Our FCA principal had to be happy with everything. So it did take a lot of time, but I'm happy to have taken that time because now we have a robust introducer model where we can reward you if you want to introduce investors to us. The lifeblood of any platform is investors.
Sorry, I should add as well. Another reason why it took so long was because we wanted to make the experience as user-friendly as possible, because the way it was working at the beginning, it was just too restrictive, too time-consuming for the introducer to fulfill all these obligations. But this process summary, you don't even need to take a screen grab. You can email us at introducer@leocrowdfunding.com and we'll send a process summary.
Yeah, okay. So the lifeblood of any platform obviously is investors. The more investors we have on the platform, the more deals we can do, and it's obviously a self-fulfilling circle in that sense. So we're all about reaching out to introducers, particularly high net worth introducers, who might have larger tickets, looking to bring in the deals. They do give us the ability to do more and more deals, which is absolutely crucial. So delighted we can now do this. So for those of you who are on the call now, which I can see who we've had these conversations with, we can now get the paperwork done and we can get on with this. So, John, I'll give you one last say on the introducer side of things. I know that's sort of an area you're sort of a little bit involved with Property Fortress, things like that. Within the world of crowdfunding, how potentially valuable is sort of a good program that people are sort of interested in sending in investors?
So I'm going to take it in a slightly different direction than maybe some people are thinking. If you're going to raise money for a future deal, it's probably good to register as an introducer and then drive some people to the platform to be looking at deals, to be KYC'd and investor ready, so that when you bring your own deal to the platform, you know there's people that you've essentially sent there that they've had some time to get used to how things work. They've looked at other deals, they've done their registration, they've passed their FCA quiz, and they've done all the steps so that they're ready to invest and they're ready to maybe take a look at your deal.
Yeah, that's another good angle. So fantastic, we'll have that up and going now. Look forward to engaging with those that want to avail of either the refer a friend or the introducer options. So next week, our special guest is Dirk Visage, and Dirk is an architect. In fact, his wife works in property as well. Is his wife, John, actually in the architect's business as well, or just work within property?
They are both architects. They're not REBA registered architects, but they studied architecture and they practice in architecture. They have slightly different biases. Dirk is a little bit more on the early stage open space. Audrey is actually a little bit more geared to managing the process to get things through planning and then managing the build phase. So they sort of have this complementary spectrum of work.
Very, very good. So I heard them both on actually your event, Property Fortress, back, I'm guessing 5-6 months ago now, or whatever it was. And yeah, I was impressed, by Dirk and Audrey. So yeah, so they're going to be here next week, and Dirk is preparing a case study to bring onto the platform with a view of potentially doing a raise in the future if he finds the right project. So this case study will give people an opportunity to see what he's done in the past, the quality of his work, and really just raise his profile on the platform. So really looking forward to having this this conversation with Dirk next week. And of course, we're on Clubhouse 11 o'clock. John, Tony, and myself will be on for a discussion on all things property crowdfunding. Again, it's been really interesting meeting new people. Literally every week, a new person comes into the room and we get a discussion, and then we follow up afterwards. So Clubhouse has proven a really good place just to connect with people and get discussions and get contacts. So the three of us will be back on again at 11 o'clock for another further discussion. And of course, you can reach out to John and me if required on anything to do with consultancy, on anything to do with property related, particularly around raising equity, structuring deals, compliance, all those things. You can contact John through social media. There's my details there on the screen. So that is us for today. A bit more technical today, but it was really important to get through those introducer details. We now have that obviously live on YouTube as well, so people can go back and watch this recording if they want to know about the introducer side of things. So that is us for today. Looking forward to next week with Dirk. So any last minute comments, Tony, and then John?
No, I don't know if I mentioned it, but the email address for introducers is introducer@LEOcrowdfunding.com.
Okay. And
yeah,
John,
I
any last?
tested that and got my introducer information. I do want to encourage people to introduce friends. It's just good if you're going to do a raise, or you think you might be doing a raise, or you're not sure if you're going to do a raise, or you'd like to have friends. It's always good when you have a raise to have your friends investing in it. That there's, as one person said, if you can't get your friends to back you, then why should strangers?
Yeah, that's a really good note to end on. If you can't get your friends to back you, why should strangers? So with that, we'll sign off for this week. Look forward to seeing you next week. Anyone join us in Clubhouse, we'll see you there just before 11. Have a great rest of Thursday and have a fantastic weekend, guys. All the best.